Alright, good afternoon everyone. Today is Thursday, December 13th, 2012. Let's go over the results. We'll start right out with the results, right? On gold, we were plus 39 ticks. On crude oil, we were minus 8. And on the NQ, we ended plus 4. Okay, so plus 39, minus 8, and plus 4 is how we ended it. There were opportunities for me to get that plus 8 back positive, but I ended up missing them. Oh, wait, I missed another one too. The natural gas. We're plus 8 ticks on natural gas as well. I forgot, I gotta write that down. Natural gas, and we're plus 8 ticks on that. Alright. Now, let's start off with the NQ, because that's where we started trading today. Alright. Before I go further, let me say, if you have not taken a free trial with us, go to www.cfrn.net/apply, sign up for the free trial. In the free trial, all we ask for is your name and your email address. You will be sent an email from us with links to videos that show you how to download everything you see here, that really teach you how to get all set up. And once you get your charts downloaded, if you want them to look just like mine, you just need to send a quick email to support@cfrn.net and ask me to send you my layout. And I will send you my layout with a little video telling you how to import it, and then your charts will look just like mine as soon as you open them up in the morning. Alright, we have a partners meeting tonight, Dwayne mentioned. This, I believe, is number 90. So for the last 92 weeks, the last 90 weeks, we've had partners meetings. We've had partners meetings every Thursday night at 9 p.m. Eastern Time, except for 2 Thanksgivings. We managed to take 2 Thursdays off in the last 90 weeks. Again, it's tonight, 9 p.m. Eastern Time. Reminded all the partners. And for anyone who's out there on the free trial, you need to become a partner to get into that meeting tonight. If you don't know how to become a partner, send a quick email to support@cfrn.net or just type it in here, and I'll send you all the information you need to become a partner. Get in there tonight. Anybody who's interested in becoming a partner, if you've taken the free trial in the past and you want to become a partner, get into that thing tonight, or just have access to it tomorrow, perhaps. Just send us an email. Support@cfrn.net. Okay. All right. The NQ. Now we started right off trading the NQ. Okay, right at the open. Let's see. We nailed the first 3 trades. It was 934. We got long right here. The market moved up right after the open. I missed this right here. Okay, I missed this nice one right here. Then I took this one, and I don't remember how many ticks I took, but I took some profit on that one. The market drew down, it topped right here, and it started to come down. And as it was coming down, it crossed through the BBC right here, pulled back up, tested the BBC, gave a down close. On the down close, I looked down here. We had bearish divergence, so I shorted the down close, and I took some profit on that. And I promptly missed another one here and another one here. But I took this one over here, so I had profit on that as well. At this point right here at 9:43, so it was the first 13 minutes or so, I was up 12 ticks, I think, on the NQ. If I had taken this one right here, I probably would have been up probably 18 or so ticks, 18, 20 ticks on the NQ in the first 13 minutes. I took this trade. They took back 8 ticks on that one. I lost that one. I missed this. That didn't actually finish setting up because it was borderline. I remember looking at it and saying it was really right on the borderline here because the black line was right on top of the green when we got the up close. So I'll just take that off. I did miss this one. I took this one and got a break even on it. After it went up and put in some profit, I moved my stop up to break even. And when it closed up here, I moved my stop up to break even, and it came back and took me out. I didn't take any more trades on the NQ, but there were many more trades to be taken. You can see in here, this is going on to like 12:30, but there was one here, one here, one here, one here, and one here, where you could have easily quadrupled what I got in the first half hour anyway. Just going through, you can see the same things happening over and over and over and over and over again. Okay, over and over and over again, and right into the close. It was this huge move down right here. The close of the morning session, I mean. There was that huge move down right there. There was another one right here. And this one right here, by the time it closed down, the black was above the BBC, so there was no trade there on the short side. Just looking to see if we could have gotten anything on the long side here. Yep, we would have gotten stopped out on the long side right here. All right, you would have gotten long right there. Had twin towers right here. And bang, it dropped down. So you would have lost 8 ticks on that one if you were trading it. Okay, but you would have gotten it right back, right there. And again, right here where we are now. This is a 4-tick range chart on the NQ. Now I'm going to show you a bunch of different markets, and what I want you to take away from this is that it's the same set of indicators and the same trade setup on all the markets. Okay, all the different markets. They're all 4-tick range, and they all have the same trade setup. Okay, the same set of indicators, same stuff. That's what you need to take away from this. All right, this was the NQ. We ended up plus 4 ticks on the NQ. I want to show natural gas if I can find that thing, because I had never traded natural gas until today. Hold on a minute, let me see if I can find it. GNGF3, is that right? Where the heck is it? Hang on, I'll find it. Here it is. All right. Natural gas came out today at 10:30. The natural gas report came out. So I know Dwayne and David had talked about natural gas in the past, and Bert too. And I've never looked at it. I've never tried to apply our stuff to it. So today I did. I'll show you the trade that I took. Well, the first trade that I took 1 tick profit on just to find out how much it was per tick. But the next trade that I took was this one right here. The same exact stuff that we just applied on the what chart was it? The NQ chart that we were looking at. Right here, price pulled back up toward the BBC. I drew a trend line. We were getting some bearish divergence. It had so much momentum that it closed down below the trend line before it hit the BBC, so I shorted right here and I took some profit right down here. Okay, that was my first trade ever on natural gas. Well, the first one using this setup. But let's just go through this, okay? The same exact stuff that we were doing over there on the NQ. This is another 4-tick range. It's the first time I've looked at it today, and it's the same stuff, all right, just over and over and over again. Right here, the pullback up to the BBC with some bearish divergence. You can sell the short right here, sell the down close. Over here, sell the close down below the trend line, or you could have just sold the down close off the BBC. Okay. And this was the one that I did take. Could have sold the down close right there. Bought the up close right here. I walked through this one with everyone in the live trading room this morning. It was right after the close of the live trading room. But we had the up close right here, and I said, excuse me, 371 was the spot right there to get long. It actually drew down to 370, so you would have gotten filled. And when it moved up, I said you might want to take profit right up here because I was looking left, and right up here is where I was thinking it was going to stall. Right over here is where I was thinking it was going to stall. And so there was an opportunity to take some more profit on that. Since then, there was one more right here, and I don't have this one indicator I don't have on here right now, the black line. But if I were to put that on, I think right here we would have not taken any trade right here on the short side. We would be looking to take one over here with the bearish divergence, okay? With this bearish divergence. Let's see, right there. A close down below that trend line would probably do it for us, all right? But I did take the time to go back here on the natural gas and outline some things. Now this right here between 10:30 and 10:31, this whole shaded area was 1 minute. All right, when the natural gas report came out, so we wouldn't be doing any trading in there. But right after that, there was an indication there, there, and there to go long. All three of those you could have gotten long on. Over here there was a spot to get short right before natural gas came out. Here a spot to get long. Here to get short. And, well, they're going too far into the pre-market there. But I just wanted to show everybody. Today was the first time we ever looked at natural gas and we traded it. and the same stuff just transfers from market to market to market to market. All right, I'm going to slide that off. And let's see, what else did we trade? We traded the NQ crude oil. I'll show you crude. We lost one trade on crude. We got a break even on another trade. I'll show you what we did. There were a bunch of opportunities on the crude. I just was too busy doing everything else to actually take them. Right in here, I went long on the up close right here with the bullish divergence. I went long on the up close, and it came down and stopped me out right away. All right, that was shortly after the open. The more conservative thing to do would have been to wait for a close up above this trend line, but we never got that. It turned around, it came down here. I could have shorted right here if I'd have been watching and gotten that back, but I clearly wasn't watching. Let's see, it got pretty choppy right in here. I wasn't really paying all that much attention to it. Up here there was a little bit of an opportunity on the long side, a little bit of an opportunity on the short side. Not much, just enough to bring your stop to break even probably. Right in here there was a good opportunity on the long side right there. Let's just see, I haven't gone all the way through and drawn all the trend lines on this, so another long opportunity right here, but pretty short term one, just enough to get your stop up to break even. It looks like I did take a short over here, and this almost went down and brought me back to even on the day. I had moved my stop to break even once we got a close down here, and it came back up and took me out at break even. Shortly after that, there were some pretty good measured moves on the way up, and could have taken some profit on those, but we were in the break period here. Our morning session ended right about here. All right, so that was crude oil this morning. I ended down 8 ticks on the crude. Okay, right there is an opportunity that's happening right now. A down close on that. Right here was one that happened a little while ago. You see how we have bearish divergence down here right now. As we speak, we have bearish divergence. The cycle's a little bit blue, so you'd really want it to hit the BBC and close below this trend line. And then you could take that short. Okay? That is the crude oil. Now, what else did I trade? Crude, natural gas, the NQ, gold. All right. Gold had a ton of opportunity this morning. We ended up with plus 39 ticks. We took a few trades, but we didn't take a whole bunch too. Okay, Frank, I'll go look at the beans, but I didn't take any trades on the beans this morning, but I'll look at them in a minute. Okay. Let's see. I am looking here. I'm going through all the statements and questions and stuff. I just want to make sure that we've got everything covered in here. I don't know about Ben. Robin. Twain. New. Okay. All right. Here we go. On the gold, the same exact stuff. It's another 4-tick range chart. The same stuff applies. If you were trading the gold this morning and let's say you were looking for 6, 8, 10 ticks, you were done by 9:37. Okay, 9:37. Right here, you would have taken a long right above this close above this trend line right here. Drew down 1 tick. 1693.1 was the entry. Went up to 1694.2. There's 11 ticks right there. That's 932.52. So maybe in 3 minutes you could have been done if you're looking for 10 ticks. The next one, it had bullish divergence to support the trade too. The next one here took a little longer. It was entry was at 1693.6. There was no drawdown on that. Okay, and that went up to 1694.5. So right here, between here and here, was $190 a contract was available to you. And that was in the first 6 or 7 minutes. Okay, price pulled back and went through the BBC right here. We didn't have any divergence. I didn't draw a trend line on it. If you were waiting for the close above the trend line, you would have had the black line cross down below the green right here to disqualify any more trades on the long side. until everything got back up above it right in here. Alright, so there was another opportunity right here to get long and another one right here to get long. I missed all that. That first half an hour over there, I was focused on the NQ at the time, I think. Let me bring something over here that I just showed you a minute ago. Okay, this was the crude oil that I showed you a minute ago. The close down below that trend line right there. Bang. So in the time that it took me to discuss this little bit on gold, crude dropped from 86.56 down to 86.42. That's $140 a contract. All right. Just want to show you that this stuff just keeps working. All right, so I missed all those opportunities in this one. I took this one. I finally took this one over here. Was this my first one? I guess it was my first one. And I got in here on the up close. Okay, I missed this one right behind the arrow. There's one right here. I could have gotten in a little bit better. Taking a little bit of profit on that. And then the next one was right here on the up close with bullish divergence. I got long right there and it took off. I mean, it literally just took off. And so I took a whole bunch of profit up here. Okay, the next one was, I mean, this one was like 30 ticks, something like that. The next one was over here. Tested the BBC and gave an up close, but the cycle was headed down, so I didn't have the divergence I like. So I waited for the up close above that trend line, got long there, took a little bit of profit. The next one over here in the other direction closed down below that trend line. So I went short there, took a little bit of profit. Let's see, was there more opportunity in here? Before the break was over, there wasn't a ton more opportunity in here. It doesn't look like I tried to take anything in here. I didn't even draw any trend lines. Since the break, though, right in here, right now, what we would look for is a close below that trend line. Okay. While I've been talking, right there, the close below that one. All right. Now, this may look a little simplistic to everybody, and it's really not that difficult, but if you have our indicator set and you're watching price approach the trend line, approach the BBC, there's two ways to trade it. One is it hits the BBC and bounces off it with divergence, and the other is there's so much momentum in the market that it doesn't make it to the BBC, and it closes down below these trend lines that you see as it's approaching the BBC. Okay? It's great to have divergence with that because that gives you some measure of what to expect out of the trade. Because when you have divergence like this, normally if the cycle's headed up like this, I wouldn't take the bounce off the BBC like this one. I wouldn't take the entry right here. I'd wait for the confirmation below the trend line. Now, what you expect when you have divergence like this is for this green line to turn down and work its way down into the cycle. Once it gets down to the cycle, you expect it to do it again. All right, like it did in here. Down to the cycle, back up, did it again. Down to the cycle, back up, did it again. All right, that's what you expect. Okay, that's it. That's the plan. That's all there is to it. It's really that simple. All right, so I'm going to wrap up the recap right there. Okay, showing everybody everything that happens over and over and over. Using a 9 tick on what market, Gary? What market would you like to look at? Anyone. Okay. I will do it over here. We'll use a 9 tick on gold. I have no idea what it's going to look like, but I would bet that it's going to look similar. Here, ignore all the yellow arrows and all that stuff. Because 4 tick can be fast for some people might want to look at a different time frame. That's fine. Here's the trend line. Okay, so you would need an up close above that trend line. Right in here would be the up close. All right, so that one drew down from 699.3. It drew down 2 ticks, and it went up 10 ticks to 1700.3. It dropped through here. There would be no trading in here. The next one would be right in here. This is the trend line on the way down. Okay. Now, mind you, on a 9 tick, you would have to have a lot more risk. The way that I do it with the 4 tick range, I double the bar size, or I double the range size with the risk. I have 8 ticks risk on every single trade I put on. Okay, so with this you'd have to have about 18 ticks of risk. Probably not that much. You could probably get away with like 12, but in this particular case right here, there's the trend line down. You would look for a close above that trend line, or actually with the bullish divergence right here. The bullish divergence right there. Just the up close right here would work. Okay, so the up close was at 1700.2. That drew down to 1699.3, drew down 9 ticks, and well, you can see from 1700.2 it went up to 1703.7. That's 25 ticks. Okay, and you can see right now what it's doing. You know, without me even showing you, you can see that it's if we drew the trend line here, we'll say right there, after everything crossed down below, you would have sold short right here at 1699.1, and it's still going down from 1699.1. Okay, so I think what you were probably trying to get at there, Gary, was you just wanted to see it on a larger time frame than the 4-tick range, right? You're not going to get as many trades. You're going to have more risk, but then you'll get bigger targets too. Okay? It's really just that simple. See, now the actual setup here on the 4-tick range would have had you short in here at 97.8, where the one that we just looked at on the, well, it would have had several shorts in here. You would have had one over here, one over here, and one over here. 99.8 was the one we were just looking at, right? It would have been about 7. I got to redraw this because this was the one we drew on the 9 tick. So I would have to draw that from the bottom. It would be up like that. The down close is right there. It would be 1700. So it would be off by just 2 ticks on that first entry. But there you have it. Okay? Yeah, absolutely, you can. If you were on that, and people trade just like that too, Gary. Now the question was, could you just stay short below the black line? Yes, you can. You know, if you had a reason to get short over here, we'll say, you could just trail your stop behind the black line right here. You know, you could trail it behind the MA1. You could trail it behind the black line. You can look down here, which is what I mentioned a few minutes ago. You know, when you have divergence, you expect the green line to turn and go down into the cycle. Once it hits the cycle, you expect it to bounce off the cycle and come back down, like it did here. This time it goes through it, though. But pulled back down, went all the way up to it. Then this time when it pulled back down, it dropped through the BBC, so it changed directions. Okay? Now right here, the way that this is coming together, not knowing where the bottom of this is going to be, you can draw the trend line like that for right now. If it continues moving up, then that would be the bottom. Okay? That would be the bottom of this bar, and you would have this as your trend line. You're getting some bearish divergence right here. When I say bearish divergence, I mean the cycle is heading down and this green line is heading up. So you're getting some bearish divergence right there. So you could take, if this bar closes up, you need this bar to close up. Or, you know, somewhere above the low of the prior bar, so I can draw this trend line. Then you can determine what to do from there. You can draw a trend line if you have 2 bars. Okay. So that's pretty much it. On the 4-tick range, if we jump over to the 4-tick range, it's probably heading toward the BBC right here. Yep, it is right there. Okay, but we don't have any divergence, so the trend line over here would be like this. Okay, so you need to close down below that trend line on the 4-tick range. If we jump back to the 9-tick range, it's still working. Okay, so it's pretty straightforward. Same stuff. And, you know, I like the range bars myself, but you can do it on other time frames, other stuff. You know, other stuff meaning other markets. You know, the NQ, the NQ one that I pointed out a little while ago. It was a short down below this trend line. Look at what it's done. It's dropped all the way down there, and there was another one right there. The crude oil one that I pointed out a little while ago. I said it closed below that trend line. The close was right there at 86.56. It dropped all the way down to 86.32 for $240 a contract. Okay. This is the natural gas again. All right. Right in here, the close below this trend line. Dropped all the way down here. I was just about to draw another trend line right here. But the same thing over and over and over. You can use range bars on all index futures, Karen, and all futures in general that you have. If you have DT Pro, you can use it on any chart. On any chart, you can use it on options. You can use it on equities. You can use it on whatever you want. Anything that you can chart. I use the same range on all of them just to keep it simple, but you don't have to. Okay. For me, it's when I'm answering questions from 100 people and I'm trading 8 different markets and all that, it's the simpler I can keep it, the better. So that's I think that's a benefit to everyone, because if I have to keep it that simple, then it should be that simple for everyone else. All right, I've been rambling on here, guys. I'm gonna stop the recording. If anybody wants to become a partner and get into the partners meeting tonight, send an email to support@cfrn.net with partner info in the subject line or something, and I'll send off the information to you. If you're on the free trial and you want to become a partner, get into that partners meeting, you should have the stuff in your inbox. If you don't, again, send me an email. And if you haven't taken the free trial, go to www.cfrn.net/apply.